phenomenon of Zoom? Why Zoom and not anything else, not Skype?
I'll make at least one comment here, and sorry, I had some technical issues and was out for a little
I was
while.
wondering what happened to you. Okay.
But I think Zoom has really focused on the customer experience, and it's just got a really wonderful interface. I know at times that they've had issues with security, and that sometimes when you're dealing with larger institutions, you get pushed back to Cisco and enterprise type conference facilities. But I think Zoom has done a really wonderful job of creating an interface where you feel like whether you're on your phone, on your computer, on your sort of any touch point, you can get on that call, and it's very simple to manage. And it just sort of works very well. And I don't think the back-end technology is very complicated, but user experience really matters. And I think from a timing perspective, sometimes you just get lucky.
Yeah, I happen to have been an investor in WebEx way back in the day, and Eric came out of WebEx, so we had the chance to back Zoom, I think, but we were in a competing company, so we couldn't do it, which makes this the biggest miss of my 25-year career. But I think if you think about the strategy, the product strategy that delivered what Gilles is saying, it was that Zoom was the first of these companies to focus on a mobile app experience. They built a great mobile app, which delivered a superior end user experience. The prior companies just before that were all browser based, which turned out to be inferior.
I also want to say, and obviously Scott, he's underplaying himself. He was on the board of WebEx, and that was a fantastic investment of the era. I will push on Kyle's comment about the back end, where I didn't live through it. Sequoia is on the board of Zoom, but I know a little bit about networking, and the way I understand it is that Eric actually made pretty major investment in kind of some overlay networks at the edge. So called a bunch of overlay networks close to where the end consumers would be living, so that you'd have a much better performance than public internet, and then rely on kind of long haul traffic, which is generally pretty good. And so there actually was like a pretty expensive networking infrastructure investment. And the way that I used to be at Google Ventures, and Google obviously has incredible networking, but when I talked about some of the networking team there, they were relatively skeptical of the architecture. But just for me as a consumer, I felt like there was a huge performance difference in Zoom 3 to 4 years ago than there was in other video conferencing. And that's where it came from to me. And, just having no jitter glitching was just a huge deal. And I think others have actually caught up over the last few years. And so I don't think they have as big of a kind of performance improvement over others today, but it was major 3 to 4 years ago.
Mm-hmm. Well, yeah, I guess it's obvious. It looks like Scott is having problems. I thought only California has power shutoffs. Sounds like New York has the same problem too. Well, he'll join us when I guess he'll figure out where to plug his phone or something. Yeah, okay. So when the crisis started in March, most of the funds were in this mode, let's wait and see and deal with the portfolio companies, do the triage. And then if you look at the investment numbers today, actually the number is higher than the same period even last year. What do you think is happening? I think that from what I see, the checks are becoming bigger and bigger. And of course, you guys have big funds, but what will happen to early stage investors and the companies who are looking to raise $1 million or $2 million, and big funds want to invest 30, 40, 50, right? So can you comment on that? That overall numbers went up, but the investments in the early stage deals actually are quite low.
Well, Sasha, before we go answer your question, since I was off, but I was still able to hear the discussion, I just wanted to come back on sort of process. And I think that one thing that using Zoom has allowed us to do, and probably everybody, is to process more deals because we're all spending less time traveling. And for those of us maybe who are international and focused, sort of on a broad geography, in our case, Europe and the US, I think that we just have more time. And I've also found that in terms of networking with larger and more prominent venture capital investors, like the folks on this call, they're more available at the moment. And so I think that, we've been able to have more dialogues with companies. We've been able to have more dialogues with investors, and that's allowed us to process in some ways more, let's say, workflow. And that's been great. I do agree with Pitch, of course, that, there's no substitute for meeting people in person. And we'll see, whether the, increased number of investments we're making result in more whiffs because we weren't able to be in the same room as people. But I do think that it's been a very productive time once we got through that initial period of concern, that sort of 2-month period right after March.
Mhm. And then are you going to comment on the question I've just asked about the investment, or you wanted just to comment on the previous one?
We're a Series A fund, and I think that we haven't noticed a huge difference out here in terms of check sizes, other than what we see as generally been a problem, or not a problem, but generally been a tendency, let's say, over a long period of time, where the large funds are getting larger, and we tend to think that creates opportunities for smaller players like us.
Yeah, we're here in London.
I'll build on Giles' point, because I think they're related. His comments are deeply related to your question, Sasha, which I think one of the reasons why kind of the investment pace the last 7 months has been at an all-time high is just that people have, investors and founders have more time. Like, kind of no one is doing anything but work. And so the timeline to schedule the next meeting has gotten compressed meaningfully. Like, instead of needing to juggle everyone's schedules of commuting, someone has a board meeting and, then they need to commute 5 hours back to San Francisco or whatever. Just we're getting meetings that day or the next morning, and people are meeting at 7 a.m. or 10 p.m. at night. And so the time scale to make decisions is compressing dramatically, and then deals are getting more competitive. And so I think that's one big piece. Is just the total amount of time being spent by investors is greater right now than under normal circumstances. Another is like the financial liquidity, where look at the tech stocks the last, in April when the markets were, March when the markets were getting shellacked, I think the pace was slower in March, but in April when the markets were coming back, and it may just be a fluke, but that's when the investment pace really started to spike, and it's held at that level. And I think part of it is this digital future that we've all been talking about. I think people are just seeing that the total market opportunity for tech companies has expanded dramatically in the last 6 months, and kind of it creates more investment opportunities than there was even 6 months ago. Just you look at the percent of the S&P that's tech stocks now, for example, and I think investors are trying to kind of go after this increased TAM.
Your question really had to do with why are there fewer startups, small startups? One answer is because so much money is available if a deal looks hot, that the model of starting a company, then building some credibility by building a product or starting sales, and then raising money later is the model that was true for a long time. But there are so many billion-dollar funds or hundreds of billion-dollar funds that they can and do make a bet, if you want to call it that, on young companies from the very beginning, and so that they spend a lot of money on marketing and that they wouldn't otherwise be able to do. So the answer to the question is there are probably plenty of startups, but the idea of the small startup that gets going with very little capital is a very difficult model these days. Since I retired from active venture capital, and we have a venture capital firm we're related to, I've been doing some little sort of deals that seem interesting and small and need guidance. A couple of women entrepreneurs, actually, and I don't think, and I think one of them in particular will probably be able to build up and get further financing, but we're not able to spend a lot of money on marketing. It's It's all on development and customer contacts. So, but this isn't the venture capital business. This is just me doing it. The answer to the question, though, is there's lots of, it'll be a lot more startups. There'll be plenty of startups, but they'll be financed heavily from the beginning. They won't have the classic a few $100,000 type of investments.
Yep, 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 yep. But
I,
so in the
I think
previous
the numbers
panel,
also, I think the numbers also skewed
Okay.
because companies are staying private longer. And so if you just look at dollars, there's more later stage investment. That actually would have been public market investment years ago, but now with the very large funds and the ability to stay private longer, you see more quote unquote later stage or private money in those numbers.
Yep. So in the previous panel, all of you, each one of you has said that for a company to grab your attention, they need to have this unique value proposition. Now, if everything is online, how do the companies find you? They cannot just be sending you emails and text messages, right? But if there is an opportunity for a chance encounter anymore, then how do these companies find you? Sean?
This is a great question. I mean, I think most VCs are taking more meetings right now than ever before. And so on the one hand, it's maybe easier, but we're also, everyone is just overwhelmed with the amount of inbound. And so unfortunately, as an investor, you need to be selective with the meetings you take. And I'll just say, for myself personally, I try to think about opportunities in two buckets. One is the things that I think are very well kind of tailored, calibrated, maybe and this is the trope, but like, someone that I know or someone that I know who knows someone. And so there's kind of an introduction that you trust. And then the other categories, I try to really think about blue sky opportunities. Like, I mean, I probably meet with 1 in every 20 cold messages that comes into my inbox. And I mean, I do read every email that comes into my inbox. And so it's really kind of those are probably the two buckets for myself personally.
Thing that's was true now and wasn't true years ago. There's plenty of big venture funds, especially in places like Palo Alto. There's a lot of people who were in a startup and made several tens of millions of dollars, and they are available to get things going. Like we used to call doctors and dentists deals when they were profitable occupations, but there's money available that isn't professional, but is experienced in startups. So the existence of these dozens of families around the peninsula who have investable money but are not terribly wealthy by modern standards, they're an important factor for startups. I think we'll see as far as how do you meet somebody? Somebody wants to have a startup. He may know somebody with money who'll back him. Also, I think they people know of Sequoia and NEA and all that, and they try to find some way of meeting them, because I get lots of inquiries from people who want to start companies. There's some way I can meet. I don't want to start naming the funds, but you all know who they are that have the fame. Then there's the new famous funds as well, like Anderson et al. So the answer to your question is that how do you find deals? You have to make yourself available. You have to be out in public so people hear of you, because so many people, venture firms are so well now known compared to how they were almost unknown 30 years ago when I was doing it. The young firm starting either has to be able to meet the big time guys who have the money, or they have to get themselves known. And sometimes lawyers and accountants come to you. They think somebody wants to start a company, then they will tell you about a client of theirs that needs money. That's a pretty good source as well.
Yep. Norm, do you agree?
I think that networking is still networking, and whether you're doing it in person or you're doing it electronically, it's your friends, your inner circle, and then your friends of friends. And as Pitch said, the industry has evolved, and so leading venture firms are all quite visible these days. It's not hard to find us. It's just a question of getting that initial introduction from someone in your network. And there's nothing like getting a warm introduction as opposed to just a cold call. So if Scott or Sean or Pitch, say, hey, you should talk to this person, I will talk to that person. If somebody just shoots me a cold email, I may or may not respond.
Yeah, so it's all the same thing, and I guess the network should continue. But then I just got a comment, I should not be looking down reading messages, but I'm reading messages because the audience is sending questions. So that's what I'm doing. I'm not being disrespectful. And one of the questions I've got is if this chance meeting is not an option again, and we are in Silicon Valley, and you cannot just go down on University Avenue, have coffee, and bump into someone who's an entrepreneur, who's an investor, what will happen to Silicon Valley? If we don't need to be here physically, the company asks, then what will happen to Silicon Valley? Will it stay? Will it be more of a mindset now? Like, what will happen? What do you think? Will Silicon Valley remain relevant? That was the question.
Well, as someone who's not in Silicon Valley, let me say the death of Silicon Valley has been predicted many times, and its replacement has been named many times, and I haven't seen it yet. So I think that while I think we will be doing more Zoom calls in the future, I think that personal meetings will resume, and having a huge amount of engineering talent, entrepreneurial energy, money, and experience, as well as some really large tech firms all the way up the West Coast, is going to continue to be a huge advantage for Silicon Valley, and something that other places aspire to, but don't reach.
I think there's also a positive entrepreneurial culture here. You can go to many parts of the world and they don't necessarily support entrepreneurialism. And here in Silicon Valley, it's celebrated. And I think that culture here will continue for decades to come.
I remember in one of the first GTS meetings, there was a question, can Silicon Valley be replicated? And Pitch was a keynote, and Pitch, do you remember when he said no? Because each country wants to have its own Silicon Valley. But now, can you think of other places in the world or other states in the US where you believe entrepreneurship is as active as it is here in Silicon Valley?
I think it's unlikely that anywhere is as active as Silicon Valley, except maybe Beijing or Shenzhen for hardware. But I on the one hand, I totally agree with everyone that I think Silicon Valley has a huge advantage over anywhere else that will endure for decades. But I also think that there are other cities that are emerging and aren't even close to the level of Silicon Valley. But I think that the world is flat is kind of going to apply to tech, and that the highest probability place to start a huge company will be in Silicon Valley. But I think we're already seeing that it's gotten a lot easier to start a big company other places as well. And I think the hubs are the obvious ones of New York, London, Los Angeles, are probably the major ones. Then there's Seattle, Boston, Washington, D.C. has a few interesting ones, like Paris. Anyways, I think we're going to definitely see a flattening of the industry.
I do think that the U.S., Silicon Valley is in the U.S. obviously, and the U.S. has a huge advantage because it's the fourth biggest country by or the third biggest country by population in the world, and it's a rich country on top of that. And so, when you sit in Europe, a lot of the countries in Europe are quite small. They might be part of a single market. They might be in Eastern Europe, but they're smaller from a population standpoint. They're divided by language, and having a large single market which shares a language, and is in some ways homogenous. I think the U.S. it's a real advantage. And so when you look at other places that can have, really huge markets like that going forward, you clearly look to India and China. They're nowhere near as rich, but the growth rates in both countries are impressive. They produce lots of engineers. I think that in different ways they do have quite entrepreneurial cultures. But boy, there's a way to go before they can match what Silicon Valley has been able to produce.
Yeah, I guess I don't know if you can hear me, Sasha. Do you see me now?
Oh, yes, the past, back.
Sorry, I've been on for a while, but I did have some more technical difficulties. I think Silicon Valley is being virtualized, and it's been going on for quite a while. It's clearly a hub, and I think it'll continue to be a hub. But I think what we see happening in our portfolio is that companies that are starting in Silicon Valley are challenged by the cost structure of Silicon Valley and the inability to recruit talent in the way that it used to be possible with the immigration laws of old. And so, most of our companies scale only to a certain point now before deciding they need to have an office somewhere else. And all the cities that have been named are popular destinations. So I think on the one hand, Silicon Valley will endure and have an advantage for a long time, but I don't think it's what it was even 10 years ago in terms of being a dominant center of technology innovation. And clearly what's happened in China in the last decade suggests that there's at least one other, country that has a growing, I'll call it an innovation economy at scale. So, so I think it's a trend that started, it will continue. It'll be important for a long time, but I don't think it'll ever again be like the epicenter that it once was. Personal view.
Yeah, just got another message from someone actually in London. They want to, they're online right now. They want to know if the government should interfere with the work of big companies. And we all know the names of those companies. Like it's mostly Google and Facebook and Twitter. Should the government be attempting to split them up? Is it an actual monopoly? If, what do you think about that? Should the government interfere with the work with tech companies that have become so big?
I think that there's a couple of issues here. One is the absolute size of the companies, which people can debate. There's nothing wrong with becoming a monopoly as long as you do that legally. I think the issue is if you have become a monopoly, whether you're IBM or Microsoft or AT&T, some of the newer names, are you abusing that monopoly position and perhaps illegally tying your monopoly service to some other product or taking advantage of your customers or the marketplace in that way? I think that'll continue to be an active discussion.
Yeah, I agree completely. I think the government should enforce in the jurisdiction should enforce the laws of that country, antitrust legislation. I think for us, as human beings, what we want to see, I think, is innovation, and we want to see founders and managers be rewarded for running companies that are innovating and delivering value. And when companies become monopolies, sometimes that stops. Sometimes we know when we're having a product forced on us, as I see Microsoft Teams open automatically on my desktop every time I log in at work. And I think that it's important for governments to, let's say, enforce the rules.
This is an old problem in the United States, going back to John D. Rockefeller and J.P. Morgan and those guys. They were very successful and very good at what they did, and they built great companies that have been the backbone of the economy. And so now we have a new generation of. We'll start naming them, but if you're going to be successful, you're going to build a company that's dominant, and the difference between dominance and abusive monopoly, there's a substantial difference there. So I think we want to encourage people to build these great companies and not overtax them or make it impossible to build a big company. But I sort of I'll go along with you, Giles, that we should enforce the laws and the behavior of companies, not to encourage competition, but in ways if they're abusive, particularly as to suppressing competition, other than by being better than the other guy, then we have to, that's where the line is drawn.
You know, and
Yeah.
I'll add just a little bit of a UK experience. I mean, you know, Amazon is one of the companies that's frequently mentioned. We have a lot of upstart logistics companies in the UK, but through the early days of the pandemic, when people couldn't find toilet paper, it was Amazon that was continuing to make deliveries. Sometimes the big companies have network effects, or they're just so well run or so innovative that they're really delivering value too.
Mhm. Yep. Another question I've just received, because we're moving toward the end of our session, and it's pretty much
Just-
open.
Sasha, I'm sorry to interrupt. I just want to make a comment on that last question. Which is that, you know, I think the rules should absolutely be enforced by, you know, for companies, but I wish there were rules for governments as well, and then someone that could enforce the rules on the governments, because I really do feel like there is a full frontal assault on a lot of companies and corporate interests right now that, you know, is going to hold back a lot of economies in a virtual flat global world. So sorry for the political comment, but something that has
It's hard not to make a political comment these days. Don't worry about it.
Yeah, we try not to make political comments, but at the same time, we're a free platform and we encourage people to have an opinion and express their opinion. It's okay to disagree. That's what makes GTS beautiful, I think, that in our audience, we're people on all kinds of political ends, but they're all together believing and building good companies. So people are free to, to comment the way they want. Another question I've received just now is when once in a while in the venture community, there will be a buzzword. And then venture funds are moving, like nobody wanted to touch the social network field, say 10 years ago. Then yes, it's popular. Now there is a word sustainability and impact. Do you have an opinion on that? What is it for you? How is it impacting your investment style? So we're commenting on sustainability, please.
Well, I'm not quite sure it's the exact same thing, Sasha, but we think of them as mission-driven companies, companies that are started for a purpose other than just producing a profit for shareholders. And we really like these kind of companies, and we like them because the employees tend to be more passionate and driven and capable of going through thicker walls or over walls when the going gets tough, because they're not just dedicated to making money. They tend to attract better employees who will do the same. And they even inspire investors who care about the mission that they're pursuing. And so oftentimes these companies turn out to be better companies for the investors. So we see this as an increasingly prevalent theme among the kinds of companies that are getting started today. I think it's perhaps because the millennial generation has more of a strong bias towards making an impact in the world, maybe than previous generations, which I think is going to turn out to be a really good thing.
Yeah, I view it exactly the same as Scott. You know, we call these double bottom line companies. And, you know, those are personally my favorite types of companies to partner with. And on sustainability, in addition to all of that, whenever you have an incredibly large and acute problem, there's oftentimes an opportunity to make a lot of money by solving portions of that problem. And, you know, clean tech, sustainability tech oftentimes has a bad reputation amongst investors because of the returns of, you know, 2005 to 2020. But I mean, personally, just look at the fires in the West recently, including, you know, Colorado right now, a lot of other problems. I believe that climate change is going to be one of the more acute problems of the next decade, and there will be an opportunity to make a huge amount of money while also trying to solve some of the negative effects of that. And so very much excited about the sector.
Yep.
I
Yeah,
agree
it's
with the desirability of double bottom line investing. I just want to make sure that there actually are two bottom lines and that it's doing social good, but also profitable. We've seen so many proposals where they're just going to do social good, but they're never going to ever achieve profitability. And you have to do both to be a successful impact investor. You can be an impact investor, but you also have to be successful.
Yeah, I agree.
Yeah.
And I think ultimately these companies follow the market. And you know, you see a company like Submer, which was presented here today, which looks like that kind of a company, which is obviously doing something which is sustainable, reducing demand for energy and using electricity in a more sustainable manner, but getting paid to do it. And you know, that's terrific. And what's harder is when you might have a solution that appears to be better for the environment, which is, you know, a bit of a hazy term, but I think we know what we're talking about. But maybe you know, the time horizon for that improvement is a long one, and many of us have a need to show returns in the shorter term. I mean, maybe we're not public companies that are showing quarter by quarter returns, and I hope we're all more thoughtful than that. But what you need sometimes is consumers also to take an interest in the environment and essentially be willing to pay more for a service that is green. And I think that's what you're seeing sometimes with millennials who are going to brand certain kinds of services greener and be willing to pay for them. But you know, what's green and what's not green and who's making that judgment is always hard. And I think that's why we like the market, because we trust the market more than sometimes we trust, for instance, a government or some sort of third-party body.
Yeah. So it has to be beyond financial returns, obviously, but to Norm's point, people should not confuse charity and the impact investments because we are in business of making money for our investors. So it's really good. But speaking of markets, how do you comment on the behavior of our stock market? The economy is, well, sort of struggling. The crisis is impacting everything we do, and the stock market is going through the roof. My personal explanation is that it's one of the companies that, Scott, actually you were an investor in, called Robinhood, creating all these new customers who never played in the stock market before. So Scott, will you comment on that, or is that something you're not going to comment on?
Well, certainly Robinhood is one of these tremendous beneficiaries of the you know, COVID tailwinds, if you will. But and that may have, I think, on the margin, you know, the whole premise of the company. It's a mission-driven company. They want to democratize access to the financial markets, and primarily they serve the millennial community with a wonderfully simple mobile application that allows people to trade stock for free. So, you know, as they've grown in popularity, they're providing more access to more people to trade in the stock market, which is a good thing. But I don't think that's the primary driver. I know there's speculation about that. I don't think that's the primary driver. I think it's as simple as two things. One is $6 trillion of stimulus that the government has pumped into the economy to make up for what was missing when many businesses went away. And the two interest rate cuts that the Federal Reserve has made, bringing interest rates to almost zero. I mean, all other things being equal, if you reduce interest rates, you make asset values go up, including the assets that are traded in the stock market. So I think, you know, the stock market's, you know, growth in value over the last 2 quarters is not entirely difficult to understand. It's really a question of whether it will continue.
I think as well that a significant portion of the stock market increase can be accounted for by large tech's performance. And you know, that's not surprising when, you know, you go around the world and you see everyone is using Amazon. I mean, in many markets now, folks are, at least in Western Europe and the States, you know, everyone's got an Apple device, smart speaker. I mean, you just see an explosion. You're not surprised these companies are so valuable because you're kind of surrounded by them all the time. And I do think that they're creating, you know, a huge amount of the increase in the stock market that you see.
Mm-hmm.
And the
Yep.
last thing, which is related to Scott's comments, but so on the one hand, we have this acceleration towards tech and digital that was probably going to take 5 more years to get where we are now. And on the other hand, given the state of the world, there's not really other asset classes to make money in. You know, historically, like commercial real estate is completely distressed right now, and a lot of the, you know, legacy industries are hurting. Interest rates are so low, so capital's not in bonds. Anyways, it just tech stocks are kind of the most obvious place to be holding your assets right now.
Okay. Another question I've received, in your portfolio companies, is there still a practice to outsource their R&D to other parts of the world? And if yes, then where? Is it Eastern Europe? Is it China? Is it India? Do your portfolio companies still outsource R&D for outside the US? Yes, no, maybe?
Depends on the.
I'll just say what I said earlier, which is that, whereas 20 years ago, our companies would grow their operations almost entirely inside the US and inside of Silicon Valley, then they started outsourcing to places like India and China. I think more recently they're outsourcing to other parts of the world, but they're very definitely outsourcing. And some of it is for the immigration issues that I mentioned before. Some of it is cost driven. Some of it is purely access to talent. There's a huge shortage of technical talent in Silicon Valley, which is why the costs are high. And when you compare that to the costs in Eastern Europe, Europe itself, Canada, all sorts of places, there are pockets of talent that companies are taking advantage of.
Mm-hmm.
You know, we're originally a Ukrainian firm, and so this is a question, the we're have all the time, and I think that there's a couple of things happening. I mean, one thing is what I agree absolutely with everything Scott has said about the cost basis in on the west coast of the U.S. I think the other thing is that around the world, folks are speaking better and better English. We can all debate whether or not that's a good thing for the world or not, but we can certainly agree that it makes it easier for collaboration between the U.S. and these other markets. And then whether it's Zoom, whether it's WebEx, whether it's other collaborative working tools, I think the ability to divide the work up into pieces and parcel it out has also become better. So I think it's just easier to do it now successfully. And so I think that that's a trend which is going to continue. And certainly from the perspective of the rest of the world, it's a wonderful trend. And I know that in our building in Kiev, in which ICU is headquartered, boy, in the old days, that would have been some banks, some insurance companies, maybe an oligarch's gas holding. And now it's 13 floors of tech companies and firms that are outsourced, where the Ukrainians are getting American style salaries. I mean, obviously there's still a delta there, but that delta shrinks as the race for competition continues, and that's great value creation for other parts of the world.
Yeah, agree with everything's been said. One statistic I learned recently that was really surprising to me is that Europe has 5.2 million software engineers. The US has 4.8 million. So there are more software engineers in Europe than in the US. A few of the companies I work with have had just tremendous success working with engineers, especially in Eastern Europe. And one comment on that, as someone that did a PhD in mathematics, the Soviet education system in mathematics was spectacular. And I think you see that that's great mathematics education is the foundation oftentimes of being, or at least a gateway to being a great programmer. And so you have this double whammy of more engineers, and I think oftentimes even better engineers, at least on the individual contributor level. And the gap of what's been lacking in the past has been the engineering management, where there's been more management experience coming out of Silicon Valley. And I think there still is a pretty big gap, but it's shrinking as there's more and more successful companies in Europe. And also people from the West willing and excited to move there.
Yep. So we're approaching the end of our session. There will be a couple more questions, and then we'll gather for a selfie. We have to do that, right? So one more question. Could there be a productivity problem with work from home that haven't been acknowledged yet? What do you think? Is it an absolutely good thing for people to work from home, or there would be issues that we're not seeing yet, but maybe that will be an opportunity for other startups to address them. What do you think? Any issues from working from home? Productivity issues?
Well, boy, I mean, I worry about depression issues. I mean, I think that even those of us who enjoy our work a great deal, when we're working from home, find it very hard to separate home life and work life. And I think that all of us now are just working more hours. This has been a trend, but it's also a trend that has accelerated since the pandemic started this year. And I think we're taking calls at all hours. And this isn't a pity party for me or anyone on this panel. We're all lucky to have jobs and be working and doing something we enjoy. But I think that that's a trend which is happening across the board. And boy, I think we're going to see some repercussions from that. So I worry about mental health.
Why would you think? I know the facts are that you're correct. What do you think about it is causing people to be depressed or upset? It's just the inability to get away from the everyday problems of family, and so we all thought we'd go off to work and then come back and have dinner with the kids and all that stuff. But the fact we're around all the time, is that what your view is of why?
No,
people-
no, not in my case. I mean, I think, of course, one issue could be just if you were maybe in a small place and just didn't have space. That would certainly be very stressful. But I mean, I think what I was talking more about is the inability to just turn off and read a book, watch a movie, go for a walk. I think that people just have, even though you think that being at home would create more personal time for you, I actually find that most people feel like it's created the opposite. Less time for reflection, less time to meditate, less time to sort of turn off. And I think that's dangerous. That's where I was coming at it from, Pitch.
We're spending a lot less time on travel. Most people live, let's say, a half hour from work. So there's an hour a day, and bigger for many people. That I'm surprised that people are. I mean, you're correct. I can't argue the fact. I'm surprised people don't find time. I've rediscovered. I've been wasting evenings on baseball on TV. I hadn't done that before, and I probably shouldn't spend that much time. But it was such a relief to get back to live TV once in a while. Um, I don't see why you're right, but you are.
I don't want to be right. And I've been reading a lot. I've been reading about the War of the Roses lately. So I mean, the time is there, but you've just got to be able to say, that you're not going to pick up the phone or look at the messages for a little while. And people feel, I think in the old days, they would say, well, I've left the office now, so I can actually turn off the phone for a few hours. But now they're working from home and they feel like, well, I never left the office. This is the office. I better have it on. And that's what I'm talking about.
I think the other contributing factor, I agree, Giles, with what you said, but I think the other contributing factor is the tremendous uncertainty in the world, which I think is a cause for, being unsettled and maybe depressed. And the third factor is just the lack of social interaction. I think we all love to see those we care about, and being restricted from being able to do that, it gets to be really old after a while.
Yeah, I know when we were debating with the team whether we should skip this year of GTS because we cannot get together, or do it online. And I'm not a huge fan of online gatherings, but that's the only thing that's available to us now. And we decided that no, we will make it happen. And yes, this is not optimal. But it's better than not seeing each other. What we'll do now, if you guys take a couple minutes, do closing statements, each one of you, then we will take a selfie. That is, we'll smile on the camera, and Ilya and Natalie will take a picture. And then we will open up the whole platform. Everybody who is now listening silently and you're not visible, will let you all back in, and we'll have our virtual networking. Now, as for the panelists, you guys can stay for that happy moment, or you are free to leave, because I promised you that you'll be done by 11, and you guys are great. It's been terrific 2 hours. So please, closing statements, couple minutes, whatever you want to say to the audience. There are several hundred people watching us all over the world. So say whatever you want to say, and then we take selfie, and we will see you in person next time. Please go in whatever order.
Sasha, I want to thank you for organizing this. You've been doing it for many years. This is the first year it's been virtual, but I found this to be a very enjoyable session to get to see Pitch and Sean and Scott, and then the rest of the panelists to get to meet Jails here. It's been a real pleasure. In terms of the audience at large, I say continue to be optimistic. We have a crisis in front of us, but we're an adaptable species. We live in the Amazon, we live in the Arctic, we live everywhere else. We'll get through this and we'll prosper. It'll just be a new normal, but it will be a new normal.
I think that's absolutely right, Norm. And I wish everybody luck, and please reach out to us if we can be helpful to you.
Yeah, I agree with all of that. Well said, Norm. And I would just say for the entrepreneurs on the line, like being an entrepreneur is incredibly hard. Just stay persistent. You got to swing 100 times to hit a home run. You just keep taking risks, and best of luck.
I guess as venture capitalists, our job is to build great companies that in the long term serve the society and to get rewarded for that financially. If you go directly after the financial rewards, you're probably going to find this frustration, and entirely possible you may not serve the society as is necessary in the long run.
And I'll
Yep.
say also thank you to Sasha, thank you to the panelists, and to everybody. This too shall pass. In the meantime, do keep an open mind and pick up that book and do turn off the phone from time to time and embrace new ideas and new ways of thinking. We're all as young as we want to be.
And go outside and smell the roses. We will see us all soon in person or online. Thank you again. Thank you to the audience. Thank you for you guys. All right, now, Natalie, you tell us what to do. We need to take a picture of the panelists. Or Ilya, one of you, please.
Yeah,
What do we
I'll
do?
take the screenshot. So 1, 2, 3. One more time. Just a second. 1, 2, 3. Okay, great.
Thank you so much. Now, Ilya, you'll start meeting people in? How does it work? Ilya?
I will start letting people out. Yes, I will start letting people in.